Hi, it's Lawrence Mack from eXp Realty. I'm here again with Chris Mulder from Tridec Mortgages. Hey Chris, how you doing?
Lawrence, very good, thank you. Thanks for having me.
Excellent. Well, today I wanted to talk about the different options that people have when they're retired or maybe they're no longer working. And so I get that question a lot from different people, typically because they're retired and they just want to know what the different options are. So just wondering, what are the options, Chris?
Yeah, it's a good question, and it's no secret that we have an aging population. So there are evolving products that are being made available for Canadian seniors. And really, I think there's three different categories. One would be relying on income and qualifying for a mortgage in a traditional sense. We'll talk about that in a second. Option number two is something called a net worth program, a specialty program developed by lenders. And then option number three is what we call a reverse mortgage, which is one of the fastest growing mortgage products in Canada. And so we'll talk a little bit about that. This year especially has been a banner year for reverse mortgages.
Awesome.
So option number one is a traditional qualification for a mortgage. So even though you're retired, presumably there's still income coming in. And the main sources of income are pensions, old age security, CPP. If you're lucky enough to get a company pension, that income can be included. And then you might also be drawing income from your RRSPs. So it might be a RIF, or you might still be in an RRSP and drawing income from that. So if you can demonstrate enough income on an annual basis, we'll need to establish a 2-year average of that income, especially if you're using investment income. But a lender will look at the 2-year average and qualify you for a mortgage traditionally. So simply put, your income per year versus your liability per year, there's what we call a debt service ratio. And as long as the numbers work, you qualify for a traditional mortgage. Easy peasy. With me so far?
So far, so good. Easy peasy.
Okay. So option number two is what we call the net worth program. And this is a unique product. Not every bank or lender has it, but it's really designed to support Canadians, especially retired Canadians who have great asset positions, but don't have a lot of income. And in this program, the lender they'll take a look at your monthly cash flow to establish a bare minimum that you qualify for. But more importantly, they're going to look at your assets that are available, specifically financial assets. So savings, stocks, bonds, investments, money in TFSAs, RRSPs, RESPs, RIFs. And they will match for every dollar you have in investment, they'll match and give you the equivalent in mortgage money without demonstrating this debt servicing requirement.
Right.
And so that's really unique and a useful product for a lot of seniors. It should be noted that you do not have to pay a premium in interest rate to qualify for this program. It's just a regular bank product if you qualify. And you have to really demonstrate via bank statements and investment statements that you can meet the criteria.
Great. So in that particular case, then, as you mentioned before, so it isn't really a premium on the interest. So you basically get kind of like a regular mortgage.
Yeah.
With that kind of stuff, which is great.
Yeah. So really useful for those who aren't earning full income anymore, but have excellent asset position.
Now, is there a specific threshold, like say $1 million, 500,000, like $5 million, whatever it is, or is it just case by case basis?
Yeah, that's a good question. I do believe that the maximum on the program is $750,000. Okay. However, if we have a particularly strong applicant who needs to stretch to $1 million for whatever reason, it could be considered on a case by case basis.
Great. And then the third option you mentioned was reverse mortgages.
Reverse mortgages. And reverse mortgages are an interesting topic. There is a lot of history around reverse mortgages, specifically in the US and in the UK, that give it a very negative connotation.
Yeah, I mean, I've heard that reverse mortgages are just really expensive in terms of the interest and just really bad. But I mean, if you could shed some light on that, that'd be great.
Yeah, Yeah, there were past products were very draconian.
Mhm.
Here in Canada, we have a major player that is CHIP reverse mortgage. So that's Canadian Home Income Plan, and that is provided by Home Equity Bank. So they've really revolutionized the product here in Canada. And the criteria of assets, the criteria of income all gets thrown out the window.
Hmm.
It's really based on two factors. Do you own a home and your age? So if you are 55 and older,
Mhm.
you can get up to 55% of the value of your home in mortgage money. And on the surface, you have to think in three dimensions when you think about the utility of a reverse mortgage, because let's get the interest rate out of the way. Yes, the interest rate is much more expensive. Okay,
Right.
so we're looking at setting an expectation between 4.5% and 5.5%, depending on the term of the mortgage. Okay, but what ends up happening with a reverse mortgage is that you do not need to make payments back to the lender. Instead, we call it a reverse mortgage because whatever the principal amount that's lent to you originally
Mhm.
is not repaid until the home is sold or you pass away. And each little bit of interest accumulates and gets added to the final payout amount. So if you borrow $100,000, you stay in the property for 15 years, that might be $50,000 of debt. So when the property is sold 15 years in the future, you pay back $150,000 to the lender. Okay,
Mhm.
that's why we call it a reverse mortgage. But it has a very, very high utility. For example, that you may have a situation where there's a senior living in a home. It's free and clear with no mortgage, but they need money for any number of reasons to support lifestyle. Living in Toronto is an expensive place.
Mhm.
Supporting lifestyle. For many families, the choice is: do you sell your home, or do you get some sort of financing to help family and early inheritance? Most people want to help their kids while they're still alive, but don't want to sell their house. So the reverse mortgage allows that type of utility. So somebody who might be wanting to work with you, Lawrence, who's relying on their parents for a down payment,
Mhm.
there is the ability for the parents to provide that down payment money through something like a reverse mortgage. And then it can be used to pay for medical expenses. This pandemic has highlighted that going to a senior's residence is not optimal for most people. So most families would prefer to have their seniors live in their current home. It's their home they've been in for 50 years. It's a family place, but in-home care is expensive. So how do you cover that? You can get a reverse mortgage. And so the interest rate almost becomes secondary.
Mhm.
And then, Lawrence, you also understand this. The concept is you borrow the money. Yes, the interest accumulates, but you're also holding on to an amazing asset, which
Right.
is Toronto real estate, which 10 years from now anyway is going to go up in value.
Mhm.
Hopefully, you're the expert in that area. But presumably, looking at the past, real estate appreciates in value and offsets whatever expenses you incur. So when you start to think about it from the different angles, it actually is not a terrible product, and really gives families a lot of options. And I really focus on family with this product
Mhm.
because usually it's seniors with children. There's sensitivity around inheritance, around value of home, who gets what. And so it's really a family decision when we're talking about reverse mortgages.
Well, some might also think though, because the interest rate is so much higher, like why couldn't those people just get like a line of credit, where you get like prime rate plus one or something like that
Yeah,
versus trying to get a more
yeah,
expensive reverse mortgage? Can you talk about that option?
yeah, absolutely. I mean, the reality is that a line of credit is no different than a mortgage in terms
Mm.
of qualification. So you have to demonstrate to the lender the ability to debt service the payments. So
Ah,
we need income in order to offset against the expenses, and you run into the same problem. So the line of credit isn't really an option for those who would be eligible for a reverse mortgage.
Yeah, makes sense. So just because they can't really service the debt, they have to sort of use this option, which is using the equity of their house in order to get the money from the bank.
Correct. You got it exactly. And when you really, and I've spoken to families about this, and Lawrence, you may have some experience, maybe even your own parents or seniors in your own life. Kind of, yeah, they've got that home paid for, they've had it paid off for years now, maybe decades, and life starts getting more expensive. And the reality of having to sell a home is quite traumatizing for a lot of families, and difficult. It's not an easy decision. So this gives them the ability to stay. And also, I should mention that there's a lot of flexibility inside the reverse mortgage product. So one thing that I come up against is they'll say, well, I'd like to get more money, but I have an existing traditional mortgage from my bank. Can I still get a reverse mortgage? The answer is yes. We can replace, you don't have to have your home paid off to get a reverse mortgage. You can replace an existing mortgage with a reverse mortgage. Also, the reverse mortgage can be set up as a line of credit. So maybe you have a home that's free and clear. Let's say it's $1 million home. You could qualify for $550,000 as a reverse mortgage line of credit, borrow zero initially, and then as life goes on, each month you can take a draw, or when you need it, you can take a draw. So you don't have to borrow all the money up front. So that's also very useful.
Those are really, really great options. So it sounds like there's a lot of details again with this particular, all these different products for if you are either retired or you no longer have working income and you're just trying to figure out what the best way is to get a mortgage or money. So it seems like if you have any questions about that, just talk to Chris Mulder from TriDeck Mortgages at any time.
Thanks very much, Lawrence.
Chris, how can we reach you?
Yeah, I was just going to say, if you need to reach me, just Google my name, Chris Mulder, like Fox Mulder, X-Files for all you sci-fi freaks. So that's Molder. And you can find me on any social media at TriDeck Mortgage. TriDeck is spelled T as in Tom, R-I, D as in David, A-C, Mortgage. I'm sure you'll flash it up on a screen somewhere here.
We'll flash it all over the place. Okay. Well, thanks a lot for joining us again this week, Chris. Talk to you later.
See you later, Lawrence. Thank you.
Bye-bye.